What is an expansionary fiscal policy? So as you've learned in the fiscal policy, fiscal, just think what the government does with their spending and taxes. But what does an expansionary fiscal policy mean? As you have learned in the monetary policy videos, the same thought process applies to this one. An expansionary, or sometimes referred to as loose fiscal policy, refers to the government aiming to support the economy. They will typically look to cut taxes and increase government spending. In addition, they will also aim to help unemployment within the economy and help stimulate inflation. Remember, inflation, the target for a lot of economies is 2%. So loose government spending. Expansionary government spending refers to more public investment aiming to provide jobs and support sectors. In this environment, you would expect to see more money flowing into sectors such as public investment, which aims to provide more jobs by building more roads and bridges, etc. They will also aim to expand social welfare, healthcare, and other social services. This will help the vulnerable people in times of economic downturn. So COVID is a good example of that, when there was a lot of housing and people, the government was refunding programs in terms of housing and social services. Ask yourself, where and why is the government spending? They will talk about this in their budgets. And as a trader, all you're thinking about is which sectors or specific government spending sections that will need the help the most, and how much is this going to contribute to economic growth? These are the questions you always ask yourself: is where are they spending it? How much does this sector equate to economic growth? And if it's a big sector that's seeing a big downturn and they're pumping loads and loads and loads and loads of money into that specific industry or sector, you're likely to see positive growth expectations in the future. So lowering taxes is obviously another way of helping to stimulate the economy. So the aim of a loose fiscal policy is obviously to help stimulate the economy. If the economy is weak and the consumers have slowed down their spending, the government aim is to help stimulate. Lowering taxes aims to put more money back into the consumers and businesses' pockets, and as a result, help stimulate the economy. The government may cut down the percentage of tax owed after a specific threshold, cutting taxes for companies, and may also freeze or lower taxes for specific products like fuel or alcohol duties. Cutting taxes on fuel, for example, helps to lower fuel prices in the UK, and as a result, more money back into the consumers' pockets. We have seen this in the UK before. So a lot of us may not know this, some of us may know it, but like the fuel prices in the UK is pretty high. And that's not because of the WTI chart or the Brent oil chart you see on the on your trading view. It's actually more about the taxes that the UK puts on companies. So if they're charging more to the company, then the company will raise their taxes or raise their prices. Even if this is why sometimes when the price of WTI is falling, like really to the floor, this is why you don't really see much movement in the pump price. When you go and drive your car up to the pump, that's how much you're going to be paying. You don't really see that tend to drop much unless the government tends to sort of cut the taxes on that. Because naturally, if the government is taxing, fuel prices, for example, import of fuel, the company will not want to eat that into their margin. They're going to have to raise the prices to battle that. And that's why in the UK in particular, the gas prices or oil prices are very, very high, which is a little bit annoying, of course. So this is just fiscal policy. This is just some graphs that's on Trading Economics, by the way. It's a free website. Just go into Google, type Trading Economics, and it's on there. So this is the total public spending excluding banks. And as you can see, it has been rising since the start of the year. And UK government spending as well. We have kind of increased slightly, basically since 2023. This is quarterly data, by the way. And as you can see, it's just risen. And that just gives the idea that the government is spending a bit more, potentially to help support the economy there. So that is what an expansionary fiscal policy is. Simply, all you're thinking about is, where is the government spending the most money? How much are they spending it by? And as a result, you're going to have a potential future positive expectation for that economy. If they're supporting a sector that doesn't really contribute that much, then you can't really be expecting positive growth in the future. What you want to be more focused on is the larger sectors, and are they experiencing more funding, more job creation, etc. And as a result, remember, it's a step-by-step process. Your idea as a trader, or your thought process as a trader, is to think about the step-by-step process, i.e., they're spending more in this sector over here, therefore more job creation, therefore likely higher inflation, therefore a bit more of a hawkish central bank, therefore stronger currency. That's what the markets will react on, is the future expectations of said policy. So that's what an expansionary fiscal policy is.